Bitcoin is currently in price discovery after surpassing its previous all-time high a little over a week ago. And people are wondering, when will this stop? When are we going to hit our cycle top? I did look at this from the perspective of how high we could go in my previous video about Bitcoin. I'll link that after this one is over. But, I'd like to look at a slightly different perspective in this video and focus more on, some other things we could look at besides Fibonacci levels to determine where Bitcoin could achieve its cycle top, or I should say when it could achieve it is more like it. Now, obviously, there's no clairvoyance here. This is not financial advice, but this is crypto simulation theory, and I am the Gaussian snake. Be sure to like and subscribe to my channel if you enjoy the content and join my free Telegram group for more. But let's go ahead and get started talking about Bitcoin. This is Bitcoin on the 2 week. We can see that after this golden cross that happened back in July of the 100 and 200 week, that's the averages that are being shown on this particular time frame. Bitcoin has, did go on a nice run, and then it came back to test this 200 week, successfully back tested it, and off we go. So this is likely to be a pretty substantial mania leg if the technicals that we've looked at over the past few months are any indication. But when is the party over? Is it going to happen in early 2025, potentially at the end of this year, or could we go all the way till October or November of next year, like we've done in previous cycles? So we have to look beyond the chart and get into some more nuanced data. And so one of my one of the channels that I really respect, Polarity Digital Crypto Analysis, they actually have their own set of indicators that can kind of help to potentially answer this question from their perspective. And I'd like to entertain that for a minute. And I'd also like to take a look at stablecoin dominance to kind of like, which is sort of the inverse Bitcoin indicator, where stablecoins are going up, then Bitcoin's usually going down and vice versa. So let's take a look at the Polarity Digital metrics first. Okay, so these are the Polarity Digital risk metrics for various cryptocurrencies, and I'll be sure to link their website in the video description so you can sign up if you want. It's very cheap considering what other crypto analysts charge, and they pretty much, I think, only are charging for their back end costs, and I think they're not even breaking even on that. So kudos to them for really serving the market. Um, Anyways, this is Bitcoin up here, and there's going to be some labels that you may not be familiar with. So UDPI stands for Upside Down Potential Indicators, and this indicates on a scale of -5 to 5 how overbought or oversold an asset is on different time frames. So the UDPI short is a scale of days to weeks. UDPI medium is usually weeks to months. UDPI long is usually months to years. So I tend to favor looking at the medium and long over the short. I don't really care too much about the short, but I think all three of them are relevant. When an asset is in the negative range, that indicates severe undervaluation that you typically don't see except in bear markets. When UDPI is in the +5 region, that typically indicates that you are at a top or near a top. And Bitcoin, of course, may not even make it to +5. It could make it to the 4 to 5 range and still have topped meaningfully. You can see that the UDPI short right now for Bitcoin is 0.01, indicating it's fairly neutral, meaning Bitcoin has quite a bit of room to run. UDPI medium is actually negative, and UDPI long is barely over zero. So these three metrics together tell me that Bitcoin has quite a bit of upside potential to it, still left in this cycle. I'm going to ignore the MBC. That's not really terribly relevant at the moment, considering where our price is. The TCI is a trend confidence indicator. Okay, and so I'm just pulling this link up for you. This quantifies relative confidence in an asset's current price trend. 76% chance that the bullish trend continues. TCI critical level, this would invalidate that. That would be 70.84K. Momentum bias indicator similar to the TCI. This quantifies the prevailing momentum underlying an asset. This, is at 0.24 and I believe rising. Now, what is particularly interesting and what I want to focus on, since the question is not really what is the cycle top going to be, but when is the cycle top going to be in this video, I want to look at the forecast model. And what's really interesting on a lot of these coins, notice that the forecast model score is fairly low. You'll see some that are higher than others, but most of them are fairly low. Bitcoin's is only at 0.51. This is the probability that the price of an asset will be higher than it currently is 6 months in the future. So values range from 0% to 100%. And right now we're at a standstill at 51%. Now, what's going to be a little bit more relevant is to zoom in on this metric and see whether it were increasing or decreasing. And then we can draw some inferences about that. And then I want to turn to stablecoin dominance to kind of, maybe fit all the pieces of the puzzle together. So note, to access the data like the forecast model, you would need to subscribe to Polarity Digital Pro and open up an account there. This chart is one of the most valuable to me at the moment in terms of trying to answer the question, when will Bitcoin top? If we look at the current score, it appears that it's in a pretty aggressive downtrend. So right now the level might be at 0.51, but it wouldn't surprise me if in a month or two we're trending pretty low. So could we see a bounce here? We could. We could see a bounce, right? We could see a bounce, but let's look at what's happened in past cycles, and maybe we should kind of work our way back gradually. So let's see what happened in late 2020. So as we were kind of, in late 2020, things were pretty explosive, and it was calculated that there was, about 87 to 90% chance that Bitcoin would be price would be higher in 6 months from then. Once we got into January and the really explosive moves started, and then especially into May, the forecast model gave a 30% chance that Bitcoin was going to be at a higher price in 6 months. And we know 6 months from then, that was past the November top. So even as we got out into, into that area, forecast model was not very confident that price was going to be higher. And eventually the forecast model did bottom out in January, saying that there was a 5% chance in 6 months the price would be higher. And then when it got to June, there was only a 10% chance that price would be higher. But by the time the forecast model got to January of 2023, we were talking like an 88% chance that price could be higher. So we're roughly in line with, let me see if I can put like a horizontal line on here, right where we're at now. See if it'll let me do that. I'm not super familiar with how to use some of these tools anymore. It's been a little while. Yeah, I can't seem to figure it out at the moment. But I also want to mention I did smooth this data out for the forecast model to being a 7-day SMA just to tune out some of the noise. But yeah, if we look at kind of where we're at now, you can see that this would match up fairly nicely with July of 2022, which was halfway through the bear market. It also matches up with May of 2021, which was getting pretty close to the end of the bull market. It matches up with April 2020. It matches up with July of 2019. December 2017. It's kind of a little frightening. Especially, I'm mainly wanting to concentrate on price on the way down. Now, notice in April 2013, we did come pretty far down and then came back up again. So this is just one metric of many, but it does tell me that there is a distinct possibility that within 6 months, Bitcoin's price will be lower than it is today. And that is something that I do want to pay attention to. And I don't want to have to assume that the cycle is going to extend all the way into October or November. My last video that, again, I'll link at the end of this one, I did mention, based on my own studies, that I thought maybe an October top was a possibility, but you have to be open-minded and willing to look at different data. And so what I'd like to do now is shift over to stablecoin dominance, since stablecoins tend to go down when Bitcoin goes up and stablecoins tend to go up when Bitcoin goes down, and study that chart and see if there's any clues there that might tell us when we're looking at a cycle top. The forecast model is saying that a cycle top could occur potentially, and not necessarily the cycle top, but at least a substantial one could occur within the next 6 months. So that would mean, what is 6 months from now? Is like May of 2025. So before May of 2025, we could see Bitcoin achieve a major cycle top. Whether that is the cycle top or not, who knows? So yeah, let's go to stablecoin dominance. And then after that, I want to look at the pi cycle top indicator and maybe extrapolate off of that as well. Okay, so what you're seeing here is stablecoin dominance, specifically Tether, but Tether is the king of stablecoins until proven otherwise. So whatever it does, the other stablecoins are going to follow for the most part. USDC would sort of be my number two, but I just prefer to look at Tether. So you can see that Tether dominance has actually had a pretty substantial event. It's actually the first time that its Gaussian channel has turned red since 2021. Now, it put in, you could say, a double top in 2022 and early 2023, and then it broke a long-term support trend line in a very, very nasty way and crashed through all the way down to the March 2024 low, and then it printed this bullish-looking pattern, and so it had a bit of a bear market rally, bear flag, and we sort of called this on this channel. This was a bear flag, broke down at the Gaussian channel, heading back down again. So the question is, where do we go from here? This is a very, very nasty candle. Are we going to put in a double bottom? And if we did, when would that be? And are we going to see a reversal of stablecoins starting to come back up in 2025? Could our cycle be cut short? It's definitely possible, right? So if you look, the red Gaussian channel on the weekly did inflect from concave down to concave up, and it widened, and that's usually a bullish sign when something like that happens. Now, granted, this occurred on a massive, massive bear flag. Okay, so this is your flagpole, this is your bear flag, broke down. The logarithmic Bollinger Bands are now in the bottom quadrant of the channel, breaking down. So I think the most likely outcome, at least in the short term, are for stablecoins to bleed. But it is sort of a really important question to ask, where could a stablecoin dominance find support? And that might actually even be a more relevant exercise than trying to stare at the Bitcoin chart, trying to guess where price discovery is going to end. Because you have data that you can work with here, whereas in price discovery, you really don't have any data outside of fib levels and maybe some momentum indicators to work with. So I like this approach. And just want to give credit to somebody in my crypto simulation theory telegram for asking me this question and getting this on my mind. So thank you for that. Let's go see what's going on here. Okay, so this is a really challenging question to answer, right? Where is stablecoin dominance going to find support? And you could really treat this question the way you would treat any chart. Charts tend to come back to areas where there's been a lot of activity. We know the 618, I'm sorry, not the 618, the 6.67% dominance was a level that acted as support formerly and then broke down to resistance. And right now we just sliced through the 0.5 fib at 4.91% stablecoin dominance. I think the 618 is a logical stopping point for now. I could definitely see there being a little bit of a challenge to just slice right through that. I think there will be some um, support found here, which means the market might slow down for a little bit in December. I think that's a reasonable thing to think that might happen. But I don't think that stablecoin dominance is going to rebound off of this and create a double bottom. I think most likely it will break down again. So I would be looking at the 786, which would be probably around January, where we could see support hit sometime in January. That's a more question mark of a place, a questionable place for me. If we could find some meaningful support, maybe we can bounce off that. But I have a suspicion that we could make it all the way down here to 2.55%. So that would correspond to, if you look an area where there's a lot of horizontal support. So I don't think I mean, to be quite honest with you, that's pretty damn low. I'm not sure we'll go that low. So I have three different red zones. I think we for sure make it to the 618 in reverse at 4.21%. No doubt about that in my mind that we're going to hit that. I have a hard time seeing a double bottom there. Like I said, it could happen, but maybe not. I'm open-minded to the 786 being a final stopping point, and that it could take some time to get there. Okay, this may not get there in January. It could be February. It could even be March. We just don't know. But I would say no lower than 2.55%. And we haven't hit levels that low since November of 2021. But it could happen. It could happen. Okay. So I'm not going to rule that out. But I think somewhere in this region at the 786 could be a place for support. Now, of course, that's just based on the static fib levels. That's very dubious at best. we should look underneath the hood and see if there's anything else that we can identify with stablecoin dominance that might be giving us some clues. Okay, this is the 2-week RCMO, reverse channel momentum oscillator for stablecoin dominance. And there's a lot of messages hidden within this metric, and it can be a very challenging one to sort of unpack. If we go back to where we first have data, I mean, I'll ignore October of 15. Let's just look here at August of 2016. We hit a major peak on stablecoin dominance momentum of around a score of 90, which is the highest ever recorded. And that was in August of 2016. Stablecoin dominance definitively bottomed right here in around December 2017, January 2018. And if you remember, that marked a major cycle top for Bitcoin. Okay, it marked a major cycle top for Bitcoin. And then stablecoin dominance peaked in March of 2018. It kind of chopped around for a while until when? 2019. Remember, there was a 2019 run, sort of like an echo bubble by Bitcoin, and stablecoin dominance put in a double bottom and then soared back up again. We know it was a painful second half of the year in 2019. And then stablecoin dominance came down in February 2020, only to rebound again during the COVID pandemic. Kind of, stayed at pretty high levels through the crab market and beginning of the bull market of 2020. And then stablecoin dominance absolutely collapsed to March of 2021. And we know that that was a significant top. Then what happened? Rocketed back up, summer lull, July of 2021, just a few months later. Look at these head and shoulders patterns we get. And then stablecoin dominance hit a bottom when? November 2021. That was the secondary peak at a level of negative 33.11. And January 2022, we know we had a bear market rally that occurred. The stablecoin dominance ultimately topped in June of 2022. That was a very painful time in the market. And then stablecoin dominance gradually went down. We had our major low in December 2022, but stablecoin dominance was on the wane. You would have thought, based on this momentum here, June of 2022 would have been a great time to DCA Bitcoin. And if you did DCA around then, certainly weren't wrong. You're doing really well right now. Stablecoin dominance hit a major bottom again. This was ultimately a higher low, but it hit a bottom in June of 2023. And then we saw the market turn around. Stablecoin dominance topped in September of 2023. And then we got a really nice run. Remember that? We got a great run at the end of 2023. And that actually printed an inverse head and shoulders on stablecoin dominance. We felt it, right? February of 2024, stablecoin dominance hit the lowest levels on the RCMO it has ever hit, negative 82.69. That's absolutely incredible. And then there was a violent rebound by stablecoin dominance that lasted all the way until almost September. You felt it in the crab trend. And stablecoin dominance started dropping again. And it's about to flip its signal line from green to red. So the question is, when's the next major bottom coming? And see, I look at this metric and it's hard to really see our current bull market having the endurance to last all the way throughout 2025 into late into the year. Like you see a lot of people on crypto Twitter talking about how this bull run is going to last like all the others. It's going to go for it's going to go for a fourth straight year. It's going to last, all the way till October. My analysis in my last video was strictly based on fibs, would suggest that, and also not just fibs, but also I talked about long-term support and resistance trend lines. Again, watch that video after this one. That makes an argument that the cycle can probably go till Q4 of 2025. But when you look at the RCMO on stablecoin dominance, it's really hard to see that. You can see this is already starting to roll over, and it's like, well, where's this bottom going to be? And if I had to take a guess, my guess would be around negative 50.24, somewhere in this level. I think it would be higher than it was in early 2021, but lower than it was in November 2021. And we're coming off of a higher level here. I think we're probably going to fall a little further. So I'd say somewhere in this region is probably, and I'll draw like a rectangle to kind of, illustrate. I think somewhere in this region could be where stablecoin dominance bottoms. And so you ask yourself, well, okay, so what does that look like? Now, keep in mind, this is a 2-week momentum indicator, right? So I think we sliced right through this. heading into December. Potentially get a little bit of a kink in the graph, and then come down potentially in January. And I don't know if the market's going to be super bullish in January. I'm just gonna, again, just kind of guessing here what this is going to look like, but it looks like a pretty steep descent. Okay. And while that descent could certainly slow down at any point and prolong the market, I think it's reasonable to think that sometime before May, just like Mark's forecast model says over at Polarity Digital, we could see a rebound by stablecoin dominance in a more meaningful way and take us back to the top of the channel. Now, does that mean that the bull cycle is over? That's the hard part. We don't know. Probably. I'll just say it's probably over at that point. Stablecoin dominance will have come down sufficiently low to where this is probably going to rebound. And you have to take this into consideration with other market data as well. So what I want to do now is I want to flip to the pi cycle top indicator, and then after that I want to look at the CME data for the federal funds rate cuts coming into next year, because we know that markets tend to not do very well when we're getting near a rate cut floor, especially if rate cuts start to become more aggressive, that it can indicate something's wrong with the economy. Also want to take a look at unemployment and just piece all this data together and come up with some kind of alternative theory to the one that I presented in my last video. I'm not a guru. It's not my job to make accurate predictions all the time, but it is my job to provide you with different perspectives that you can form your own conclusions on, and then as a team we can maybe come to some kind of idea of what might be going on behind the scenes. Okay, so I pulled up the pi cycle top indicator, and this triggers around the time that your slower moving average, which is the 350 times 2, that's in green, EMA, crosses with the 100. I think it's the 111. Let's just check. Yeah, the 111 day, a week, not day, EMA. And we can see if we look at past cycles that the pi cycle top has been a pretty reliable indicator of major market tops, whether it was the top or not. It was triggered here in 2013 twice on both peaks. It was triggered in 2017 on that peak, and it was triggered on the 2021 cycle peak, although it didn't trigger in November. This to me is more of a secondary bounce, and when you account for the money supply, this actually, in terms of money supply, might have been a lower high. I mean, 69K is higher than 64K. I'm not arguing that, but I'm just saying in terms of inflation that occurred from here to here, the value of 69K may have actually been less than the value of 64K. It's a double top, but the pi cycle top was triggered here. Okay, and after this golden cross of the 111-day moving average with the 350 times 2. A depth cross in May of 2023, and ever since then, the 111 has been moving back up. So you have to kind of try to extrapolate how this thing might move. The 350 times 2 is relatively flat. So if we just extend this a little bit further, right, like we could assume maybe the 350 might be something like that. Let's see if we can make that green. Okay, and then if we were to draw what we think might happen with the 111, if we were to draw this out, we could maybe extrapolate. It'll pick up some ground. Let me try redrawing that again. Kind of like that, and it puts us in March of 2025, and so that would tell me that a pi cycle top would likely trigger in Q2 of 2025. Okay. And my original theory before I did the one in the last video was that this would be where we likely would face some kind of reckoning sometime around here. Okay. So based on a lot more data than what I presented in my last video, this is more convincing to me. I just keep seeing Q2 2025 repetitively showing up, or even late Q1 potentially at the earliest, right? Because if this triggers in March, for instance, like this is showing March, I mean, that's actually Q1, right? So it might not even be Q2. It could be Q1, right? Like late Q1, right? Could be like late Q1 This is really hard to draw, or early 20 or early Q2, and that's in line with Mark's forecast model. And I'm not like trying to find data to fit his hypothesis. It's just the data is supporting his hypothesis. What it cannot tell us is if that's the major peak, but we know the one time that didn't happen. Well, there's two times we had that happen in April-ish of 2013, and then we had another top in November. But it's like, what would cause the market to top? Like, and that's kind of what I want to start to get into with the economic data. There is one other indicator I want to look at. I'm gonna have to pull up Bitcoin on an exchange like Bitstamp or something like that to look at this data. I want to look at the overbought and oversold conditions of Bitcoin, okay, throughout the ages, and see kind of how that's played out. Also, probably on a weekly time frame. So we have yet another, the pi cycle top indicator suggesting that this bull cycle could be over as early as the beginning of next year, right? So a few months into next year. And I know I haven't really made this about price because it's kind of hard to talk about price when you don't even know the when. But if we were to look at the logarithmic regression channel and sort of extend that out, on the top, I extended it way further than I needed to, and put the crosshairs on. If we were to top, let's say in March of 2025 or February, that would correspond to a price just underneath $200,000. So between 180 to 200,000, and that very well could happen, especially if we make near the top of this channel like we usually do. 200K could actually be the line in the sand. So that's something to keep in mind. If price does start to get up to those levels, we are probably near a top, because right now the 100, this is a very reliable risk indicator. The risk on Bitcoin right now is only 51.91, so bull run's barely getting started. But we know that there tends to be a parabolic nature to the growth of price once we're in price discovery. And I feel like we've just barely entered into price discovery. So we still have some time to go, but it can happen very rapidly that we enter into these like upper risk levels. I mean, look at back here, how quickly it happened, or back here, how quickly mania happens. It happens very fast. And that could be it. It could be over, right? If the market were to hit between 152 to 179,000 today, that would be considered a topping range. Okay. So if in a few months we're hitting 180K, that's going to start to make me turn bearish. I might even turn bearish at 170 or even 160K, depending on when it happens, right? So I think we will get that high. I think there's a high chance we head back up into this upper region, but I don't think that we necessarily have to wait till October for that to happen. Because obviously, if we go all the way out till October of 2025, which was in my last video, well, we could hit price levels. I have to actually zoom up to even see them. The upper band by then could be around 228,000. So, or even higher than that. I haven't really. We could wick above it, right? So, I think in my video that I did, I said somewhere between like 215 to 280 or 270 or something. I forget the exact range that I gave. If we were to go deep into 2025. But the data really is not showing that to be a likely situation. At least, we can never know exactly what's going to happen. But I just wanted to show you these risk levels real quick. Now I want to go to the overbought, oversold conditions. So this is the MFI, or Money Flow Index Oscillator Volume Profile. And let's go ahead and take a look at when price has been in the overbought region, which is above the green line, and maybe make some inferences about when we might head there again, and if it's significant if we do. Just looking back in history, we can see that we hit this in October of 2015, December of 2015. This is on the 5-day time frame. I don't really know that anything that significant was happening then. So December 2016. Okay, December 2017, I know was a market cycle top. Let's go over here. Go back in time. December 2013, market cycle top. February 2013, intermediate top. April 2019, intermediate top. June 2020, nothing really going on, just grinding up. January 2021, getting near a market cycle top. We weren't quite there yet, but we were near one. You can see November doesn't even really register on here, does it? Not really. April 2021, April 2022, bear market rally top. January 2023, this was coming out of the bear market. October 2023, this was quite a wild ride to quite a wild ride up. March of 2024, again, significant top, and look where we are right now, November of 2024, heading back up to the green line. So if we penetrate this green line or get near it, that could represent a potential topping area, or not necessarily the top, but that we could start carving out a top. Like maybe our return on investment has gotten about as exhausted as it's going to get. You can see most of the bottoming occurred with higher lows, right, relative to say like June of 2021. It's been higher low after higher low. We haven't really had a major breakdown in MFI since then. So I don't really know how much weight you want to give to this metric. It's a little bit hard to interpret and as standing alone, but it could certainly work well in confluence with other indicators. Okay, so with unemployment rate, everybody was like afraid that we were about to head straight into a recession. But if you study sort of the formation of what's actually happened here, and all charts kind of behave the same way, you can see yes, unemployment is trending up, but it's not really doing so aggressively. This is the red Gaussian channel, which it's hard to tell if it's inflected or not. I can't really tell looking at this. I genuinely don't know. But we see a Gaussian channel that is red and concave down. We see that unemployment hit the channel and got projected at the bottom of the channel. In terms of a Bollinger band, these have gotten pretty constricted. So that generally does spell some kind of breakout coming. So we could see unemployment pick up in a more material way. And this actually is sort of my base case heading into 2025, but not in 2024. Okay, I think that unemployment in the next few months is going to come in pretty strong. It might go down a little bit. I don't think it will go below 4%, but I think it will remain in this range, most likely that it's been in. And I think there's a chance that this could start to break out in quarter two or late quarter one of 2025, and that could actually be the reason why Bitcoin might find a top around then. It could actually have to do with the economy. I'm more concerned about unemployment than I am about like inflation coming back, although that is something we should also be concerned about. But inflation data looks really great right now. This, yes, I don't know why it's on the 5 days. It should be on the monthly. I mean, it's not giving me 5-day data. It's giving me monthly data. So this is a chart that we're going to want to track very closely, just to kind of like let you know that that's something we should be looking. Okay, this is the federal funds rate, and I actually did a video on recessions and the federal funds rate. It's not a perfect correlation, but generally speaking, we see markets bottom near a rate cut floor. That certainly happened in 2020. Our rates went way higher this time than they did in 2020, but they are dropping now. We are at the bottom of the weighted logarithm. I'm sorry, these are not weighted logarithmic. Bottom of the Bollinger Bands. It's kind of an interesting setup here. Gaussian channels up, showing the effect of these massive rate hikes. So it's kind of interesting. Will the Fed pause for a little while? Will they continue to cut aggressively? Well, we'll need to go and see what the markets think. We'll have to go and look at the CME group. Certainly, the presidential election results affect that decision. But this could get to be really bad for our market if once we start to see rates get closer to a floor. And you might think to yourself, well, why is that? Like, why is having lower interest rates going to be bad for the economy? And it's not really there's not a simple answer to that. I mean, I think it just is a reflection of the damage that's been done to the economy. And that's the reason why interest rates have come down so low, and the Fed feels a need to stimulate the economy. So this is something we definitely want to track. We can see last time that we rode the Bollinger Band, green line, Fed rates were held steady for a little while, and then there was a swift drop. And we know what happened in March 2020. So we're at the bottom line now, and 1, 2, 3, 4, 5 months. I mean, that could put us into, 2025 again, quarter one of 2025. What if we see some massive cuts there? Might we see a drop like we saw here? I mean, I can't tell you that for sure, but we should definitely try to look and see and just keep this stuff. We're looking at a whole multitude of data to form a reasonable inference about why the cycle could potentially end in quarter two of next year or late quarter one. So for the December 2024 FOMC meeting, the Fed is currently projecting the CME group is currently projecting a 65% chance of a 25 basis point rate cut. okay, from where we're currently at, I believe. Let's see, 420. I've actually lost track of where we are. Um, because I think we cut by 25 basis points in the last meeting. But if you look at the probabilities of where we're at, no, I guess that would actually be a, sorry, a 50 basis point cut. It's aggressive cuts. So the CME group is projecting an aggressive cut in December, followed by a rate pause. So that would keep us probably more in line if you were to go back to the chart we were just looking at, staying kind of on the lower end of the weight of the Bollinger Band channel. And the next fairly aggressive cut, I want to call it, I mean, the next cut seems to be March of 2025 and hold steady in another. So you can, it's hard to say where the terminal rate is going to be. I mean, I think somewhere in the 300s, but this is a lot slower than it was originally forecast. Who the heck knows? This will probably change between now and December. Very volatile data. So I think we need to kind of like look at this data and say, okay, so is the Fed going to reach some kind of floor in March when they cut potentially, or I'm sorry, not March, in July? Is that potentially going to be a floor? So could they cut in March and maybe markets bottom sometime here? I don't know. This is, most bear markets last about a year. Would this one be different? Honestly, I don't know. But that rate cut going from a rate pause to a cut in March, what if they have to cut more aggressively because of unemployment data? No, we can't take this too seriously at the moment. So, I'm just kind of throwing this data out there. You certainly can see the argument for a late quarter one, quarter two dump in the market. And just for fun, why don't we just put Bitcoin on a monthly chart with the Bollinger Bands, and you can see that when Bitcoin's broken out of these Bollinger Bands, like in 2020, it wasn't that long until we hit a significant top. I mean, it even happened here in March of 2024. Here we are about to break through again. Could be just a few months. Could be just a few months. 2017 was obviously a little bit different. So we'll have to track all this. So I mean, what should you do with all this data? Like, what was the point of this video? I think the point of this video is to make sure that you have a plan, right? You have a plan in place in case the market tops earlier than you think it's going to do so, right? It's going to be a popular narrative to think that the market has to go deep, the bull market has to go deep into 2025, take us all the way to October. But we have macroeconomic data that we haven't really seen since 2020. And I guarantee you that the mania coming is going to be so fierce that people are going to all but forget about a recession. And I don't think we should sit here dooming and glooming either. We need to enjoy the bull run that we've been waiting for, but we have to also remember to take profits. And that's a hard thing to do when you're in the middle of mania because you always think it can go a little bit higher, can go a little bit higher. And markets do move very quickly when they're going parabolic. So if you take profits at, on the first of the month, you might have just gypped yourself out of a 500% gain from there or something like that. That doesn't feel very good. But remember, profits are better than no profits. And nobody ever got hurt by taking profits. So I think it's important to come up with a strategy and a plan. And at Crypto Simulation Theory, we have people who share their strategies and plans. There's some really good ones there. So be sure to join my Telegram group if you want to hear more about those. And you need to have some metrics that you're following. And at Crypto Simulation Theory, we have a whole variety of them, and also upside down crypto data at Polarity Digital. They have their metrics as well, so you can work with any of those to form your own conclusions. So again, I'll post my video from the Bitcoin to 270K or whatever, that video that I did a few days ago, so you can compare what I said in this video to that video, and then again form your own conclusions. That's ultimately something that I can't do for you because none of this is financial advice. It's just a bunch of ideas, and the charts will tell us what's going to happen. There's no influencer or guru out there who can tell you what's going to happen with any degree of certainty. They'll come back and say, "Oh yeah, I called it," but I don't have that kind of pride. I know I'm going to be wrong a lot, and when I'm right, great, I'm right. But time to move on to the next thing. So, thanks for joining me for another episode of Crypto Simulation Theory. I am the Gaussian Snake, and I hope you'll join my Telegram. Like, subscribe, comment if you have anything you want to add. What do you think? When do you think Bitcoin's going to top? And what are you going to do about it in the meantime? So we'd love to hear from you. All right, until next time, have a great bull market.